Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long side breakout of the wedge formation here on crude oil. Now, we're not looking for a big move. I'm just looking for a one-to-one target. That's all we're really kind of asking for from the market here. So let me get my stop in place. And the target is going to be a one-to-one move. So we're looking for 45. Now, it looks like I may have gotten a little bit of a better fill because the entry should be at 36. So we want to make sure that our target is one-to-one for our stop up at 47. Now, the reason that I'm getting in a little bit later, I'm sacrificing a little bit of profit for what I like to call confirmation, right? Now, the reason I want to sacrifice a little bit of profit this time around is because I don't necessarily believe them on the first try. We had this wedge, very obvious wedge, and they tried to break out lower and immediately failed. There's a good chance that if it goes up through the highs, the same thing might happen, and you can tell they tried, right? That big bear candle dropped lower. So a lot of buyers are going to be slightly hesitant. They don't want to buy the first time because it failed the last time that happened. So waiting for a little bit more information allows you to get into a slightly more reliable trade. Yeah, you give up a little bit of profit, but your probability goes up dramatically versus getting in early. Now, if you did get in early on this breakout, this time it worked. But there will be other times where that bites you, so you have to be a little bit careful. I opted to wait for a little bit more confirmation. We had the sellers try, huge bear candle, no follow through. Buyers turn right back up again. Sellers try one more time, complete trap through the bottom, and it goes into a bull engulfing candle, and that tells us everything we need to know. The buyers are in this and they're looking for a drive higher. Now, my stop is underneath the candle that broke out. This is sort of the confirmation candle, and if we break below the low of that, I'm not interested in hanging on anymore. So my stop is going to go down to 46.25, and because my entry is at 35, that means that we want to go for a one-to-one. Now, in this case, one or maybe more of the contracts got filled at a better price. The normal entry should have been at 36, so I'm looking for 47 as the final objective. Not a huge trade, but a nice little scalp, sacrificing a little bit of the profit for an increase in the probability. So we'll give the buyers a little bit of time here, see if they can drive up and finish the job off at 47. All right, we're getting another bounce off this 35 level. This break-even location for us has been insane in terms of the amount of bounces there. That's forming a very significant level that I do not want to see broken. If that's broken, chances are there's going to be a big stop run, and I do not want to be part of it. I'm looking to exit if it breaks below that, and we turn up and we get the target fill. But look at the amount of wicks that came in all at that exact same price. That's a really big clue that buyers are really trying to defend aggressively in here, but if they fail, expect a pretty big drop lower. In this case, they successfully defended, they got that push higher, and they got the target filled. So beautiful run higher here on that wedge breakout. Sacrificed a little bit of profit just for an increase in probability, but as you can tell, that definitely worked in our favor. Beautiful move up, and we got the probability on our side, and we took a nice one-to-one towards the top side there. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.